But just keep an eye out on a new listing now. We have Awfis, that is the stock that listed. The workspace solutions provider made its debut on D Street, listing with gains of about 13% to its issue price of 383 rupees. Thereafter saw some extended buying, so now around 17% higher from its issue price. Amit Ramani, the chairman and managing director of the company, now joins us from the exchanges. Amit, congratulations. It's a big day for you and your team. We remember speaking with you here in our studio on the day of the issue open, and we asked you to give us more numbers once you start listing. You explained us the business, you explained the growth vectors of the company. Now let's drill it down to basics and talk about numbers. Your EBITDA has been growing. When do you turn bottom line profitable? Does it happen in this financial year or next financial year?
So, Nigel, clearly, I think we are headed in that direction, right? I spoke last time also that the profit on absolute basis is negative 18 crores, right, for the December quarter and for the full year of 9 months. So, I think we are headed in the direction. We are going to be coming out with our results in the next couple of weeks. So, wait till now. I think there is, positivity, at least from our standpoint. We look forward to presenting our first results.
All right, but give us, Amit, first of all, congratulations on the listing on a day when the markets are under pressure. You have your stock that's up close to around 10-15%. So the start is good, but now you need to build on from there, right, in cricketing parlance. Tell us about revenue growth.
Absolutely.
You have grown at a phenomenal pace. Give us a rough number at least. Yes, we know you're going to come out with your published numbers, but what do you aspire to grow at in the coming years?
So, clearly, I think the historic numbers, as I mentioned, 75% CAGR, we look forward to obviously keeping the momentum going. The FY24 numbers should be along the similar growth journey. You've seen the 9-month number. It's at about 617 crores. We ended FY23 at about 545. So directionally, we are, maintaining the CAGR that we are looking at. Going forward also, I think the growth will be a key part of our strategy, but I think we have to balance it with profitability as well, which we are, looking to obviously achieve in the near future. But clearly, we will balance growth with profitability.
All right, balance growth with profitability. But last time you joined us, you said that, the money that you're raising for the IPO, you will be setting up 12 centers as well. By when do these 12 centers hit your overall books, and what is the incremental revenue that you will get from here?
Yeah, so we will do 45 centers this year, about 32,000 seats. Good news is a lot of those centers are already under fit out and will go live. Actually, as of March, many of those centers are live out of that 45. So we should see a large amount of growth coming from the new centers that are going to go live, already actually have gone live and will go live in the next, 3 to 4 months.
All right, Amit, how often do your rentals get revised upwards in your business?
So the rental basically is after 3 years. Every 3 years, there's about a 15% hike. That is only where there are rental properties. In cases where there's in our managed aggregation model, where there's a minimum guarantee, in some cases it does after 3 years. In many cases, it continues the same, because technically we would love for our landlord partners to make a higher number through the profit sharing.
All right. And what is the split of the leased out space in Tier 1, Tier 2 and Metro? Where are you focusing on now going forward? Is the increase in Metros, Tier 2s or Tier 1s?
So 90-10 split, 90% is Tier 1 cities, which are the 9 Tier 1 cities, and about 10% is out of the 7 Tier 2 cities that we have. We will open new centers in Guwahati, Lucknow and Vijayawada, which obviously will bring us to a total of about 19 total cities. The split will almost remain similar, because the large amount of opportunity we see is in Tier 1 cities. So the split will be similar to what we have today, around 90-10.
Right. And what about occupancy? You said that, your older spaces are 83% occupied. What proportion of your current portfolio is sub 65%? Because it's sub 65% where you don't make a profit. It's EBITDA break even only after 65%.
No, so the blended occupancy is currently 71%. The case of straight lease, we make at 60-65% occupancy. But in case of managed aggregation, where there is a minimum guarantee, we make between 40 to 45% occupancy. Where there is no minimum guarantee, which is actually 50% of the managed aggregation portfolio, we make money at 25% occupancy. So hence, I mean, overall occupancy portfolio-wise, I think it just depends on the center. But in a managed aggregation, no MG 25, with MG 40-45, and where it's a straight lease at 60-65% occupancy.
No, what we're trying to get at is what proportion of your portfolio right now is EBITDA negative, and when does that break even?
So see, that's a matter of, building up the occupancy. It takes us about anywhere between 6 to 7 months to get to 80% occupancy across the board. That's how we did it in all centers that we had launched in FY22. Across the portfolio, I would say probably less than probably 15% of the centers which are younger than 6 months probably are, at a lower occupancy. But as I mentioned, in the model where there is no MG, right, for the first 5 to 13 months, there is no MG, at 25% occupancy, we start making money. So about 10% of the portfolio will be below that 25%.
All right, first 9 months of this year, 19 crore loss. You said that you will be reporting your numbers. So let's see whether the street sees you in the black for FY24, or maybe that would be for the next financial year. But a good day for you and a momentous one. Thank you so much for joining in. Looking forward to speaking with you after your numbers as well.